Eastman Chemical's lackluster earnings report Friday led to a steep drop in the KINGSPORT company's stock price. It's our top story tonight. Thank you for joining us. I'm Casey Marler.
I'm Sarah Diamond. CEO Mark Costa said chaos from tariffs and what he called related uncertainty heightened impacts of ongoing global economic uncertainty. Jeff Keeling reviewed the report and earnings call with a local economist who offered some insight. Jeff?
Yeah, so the results weren't terrible. I mean, Eastman narrowly missed revenue targets and earnings were below the market estimates by about 8%. But share prices dropped to the lowest point in years, and they've recovered little of that since. David Campbell's an economist at Milligan University, and he says some short-term pain looks likely, but that Eastman's long-term outlook seems positive, especially if its chemical recycling technology captures some significant market share.
If your ingredients come across borders, or if your output then goes across a border, that's when you get exposed to the type of tariff chaos that Mr. Costa referred to in the earnings call.
Cash conservation, one way to deal with the chaos, could have some localized ripple effects.
In the cost-cutting initiative, the CFO mentioned labor cuts would be involved.
Probably not so much for the manufacturing employee base.
They're not rationalizing factories, they're not closing factories. That there's a whole lot of tariff chaos is not the end of the world because they've got a huge domestic production facility in the United States.
But the company's local workforce isn't just factory workers and engineers.
It's my guess based on what they said in the earnings call. Very well could be some cuts to corporate jobs, which would affect primarily the KINGSPORT area at the headquarters.
KINGSPORT also offers one of the bright spots, big improvements in performance and revenue from the chemical recycling methanolysis facility.
It's a superior product that they're producing there, and that's one of the reasons that I think that plant is doing so well now that they've ironed out a few of the kinks.
Campbell said Eastman's overall product offerings are probably in more of a lull than a spiral as its customers also grapple with economic uncertainty.
Eastman sees that demand coming back in the future, which is why they're going to hang on to all of those product lines right now.
Fossil fuel-based plastic is cheap right now and companies are strapped. But Campbell thinks Eastman's recycled plastic efforts will pay off.
They have a great product. But it does cost more. I have to believe that at the end of the day, that environmental consciousness of the consumer is something in the long term that will win out over the ability to produce just cheap and fast right now.
Eastman's net profit of 6.1% in the second quarter was well below the same quarter last year when it was almost 10%. Since early April's first major tariff announcement, the company's 200-day moving average share price is down a little more than 10%.
Jeff, thanks. And Eastman's stock price was at $61.27 per share at today's closing bell. It's down from $78.26 a share just a month ago. It's a decrease of about 22%. Eastman representatives have been working to get us a statement on the earnings report since we requested it several days ago. We have not yet received it.